Health Cover Uncovered, an initiative by Star Health Insurance and CNBC TV 18.
Hello and welcome to Health Cover Uncovered, an initiative by Star Health Insurance and CNBC TV 18. I'm Mridu Bhandari. India's health insurance story is at an inflection point. Coverage is expanding, expectations are rising, and the economics of healthcare is being tested like never before. So how does a leading insurer then balance growth with discipline, innovation with sustainability, and public market expectations with long-term value creation? To answer these questions and more, I'm joined today by Nilesh Kambli, Chief Financial Officer of Star Health and Allied Insurance Company, a seasoned finance leader who has seen the sector from the inside, across cycles, and through a landmark public listing. So we are delighted today to get the CFO's playbook on scaling trust, capital, and protection in India's health insurance market. Nilesh, thank you so much for joining us here today.
Thank you for having me on the show.
Well, let's begin with the big picture. Now, of course, health insurance is becoming very critical, and rightly so, for India's social infrastructure, for our financial infrastructure. From a sector-wide lens, in your experience now, when you look at the next 5-7 years or so, how do you see the market evolving in terms of consumer expectations, consumer behavior, product depth? What do you see shifting in the next couple of years?
Yeah. Thank you for asking this question. I think insurance in India is at an inflection point. Insurance premium today have crossed 1.717 lakh crore, which is the largest sector in the general insurance market. If you talk about retail health, it will cross 60,000 crores in the current year, growing at a healthy rate of 15 to 18% over a period of time. So health insurance in India, from a push-based product, it is becoming a pull-based financial wellness product. If we look at the product from the key lenses like market penetration, the market penetration continues to be low. Around 50 crore people in India, which is roughly 40% of the Indian population, is covered through health insurance. If we look at retail health insurance, it is only 6 crore lives which are covered, which is a very, very low number. Some of the structural changes which have been happening through regulatory changes, through the tax cut, I think that will help to expand the market in a very big way. The zero GST, which was introduced in September 25, that's a very big change which has ensured affordability of the product. And we have seen a good growth coming in Q3, and it continues in Jan as well. The other thing is the product depth. It is moving from illness to wellness. It was earlier only hospitalization covers that were sold, but today OPD, which is the outpatient covers, have moved from 5% in 2023 to around 22% as we speak in 2026. These products were earlier sold as riders. Now we see that these products are the main products covering telemedicine, diagnostics. So the whole concept is shifting from hospitalization to wellness products. In terms of other factors, if we see the consumer expectation and the customer service, this sector always lacked customer trust, because the transparency was very low. The health policies had certain terms and conditions, which were very difficult to understand for a common public. The consumers today are demanding that it's a simple language, it can be easily understood. Even the regulator is pitching into to ensure that the customer information sheet, which has very clear plain languages, is available to the customers. So a lot of changes, are ensuring that the customers are well aware there is trust in the sector, and the sector continues to grow, which will help, to have progressive India.
And all of this to basically increase penetration and
Absolutely,
have
yes.
more and more people covering, their health and getting protected, of course. Now, as we are looking at this coverage expanding, competition, of course, is also intensifying with health insurance providers. So the economics of health insurance is really in sharp focus today. Now, as a CFO, in your view, what really defines a very well-structured, balanced, resilient sort of a business model for a health insurance company?
Yeah, I think a resilient business model is very important, which is defined by how well there is competition, how the pricing is there, at what scale the players are able to operate, and multiple other things. Competition in any industry is very good because it helps in product innovation. It helps in digital adoption of various things. It helps to expand the market in a very big way. It helps in customer awareness. So if we talk about resilient business model, what is required is, along with scale, people are able to get the product at better prices. Affordability is something which is available. The products are accessible to the customers in a friendly way. That is where the tech and digital initiatives come into play. See, one more important thing is to build that trust and the competitive advantage is the claim service. The moment of truth is when the customer goes in for a claim and he needs to have the best-in-class service. The provider needs, the payer, the insurance company needs to provide the best-in-class service. So these are all the competitive factors which will ensure that the leaders remain the leaders and, are able to scale up the business in a very big way. So basically, a business model is something which is based on products, distribution, and customer service. But a resilient business model is something which is based on trust, innovation, and technological capability, is what I believe.
All right. And at Star Health, how are you ensuring that your business model is all this and more?
See, at Star Health, we've always believed in product innovation. We were the first to come up with senior citizen product in 2008. No one was offering this product for people who were above 60 years, but Star Health was a pioneer in this. Over the years, we have ensured, products available for all demographics. Women's care product was something which was launched. Disease-specific products like cancer care, diabetics care, all these products we have launched. So product innovation is something which is Star Health is a pioneer in this. In customer service also, we have been ahead in terms of all these factors. We have a network of 15,000 hospitals. 85% of the claims are cashless. And today, the customer expectation is not that the claim is approved in days. The expectation is that the claim gets approved in minutes.
Yes.
And this is something which we're tracking on a regular basis and ensuring that, the customer satisfaction is at its best.
Wonderful. Well, with all of this happening, you've, of course, also achieved massive scale. At the board and leadership level, then, what do conversations look like? Conversations around growth, around underwriting discipline, around the return on capital, of the business. Give us a sense of what goes on in the C-suite as far as all this is concerned.
Yeah. So, as everyone knows, Star Health is a market leader in this segment with 31% market share. The objective is to keep on growing and expand in this market. The insurance penetration, as we spoke, continues to be low. So the objective is to move into semi-urban and rural territories where actually people need this kind of insurance. The facilities are available today, and some of these things are pushing the people into poverty. If they don't have insurance, they have to incur huge cost. So while we do customer service, one has to understand it's a listed enterprise, it's a commercial organization, and profitability is something which is of importance to the stakeholders. So we believe, we want to create a business model which aligns with the interest of all the stakeholders: shareholders, investors, management, customers, the hospital network, the agents that we, who distribute this product. And one important thing is the way the business reporting happens. There are multiple ways in today the profitability is reported in the market. There is an Indian GAAP which is quite old. There is IFRS reporting, which is a global standard. We believe a correct reporting standard will ensure that the profitability of the business is reflected truly and correctly. And that is where we want to promote a correct reporting standard. And that's the management discussion, While we do our business, how we report profits, on what basis we take decisions. And we believe IFRS reporting is something which is helping us in taking these decisions.
Yes, absolutely. We'll come back to that and dive a little deeper into IFRS reporting. But, you spoke about listing. So let me go back to that. You led the public listing of the company in December 2021, bang in the middle of COVID-19. Couldn't have been easy. And since then, it's been a testing time for markets around the world. So how has being a listed company really transformed the quality or the cadence of financial decision-making that happens within the company, and let's talk about something going beyond just compliance. Obviously, you would be complying, but beyond that, how has that changed?
See, the interesting part is we got listed in the middle of COVID, and that was an interesting time, but the growth was in a very big way, but we saw that the claims were also coming in a very big way. Globally, if we see, pandemic was something which is not covered in normal policies, but the company as well as the regulator took a stand that the COVID claims will be part of this retail health insurance coverage. We paid more than 4,000 crores of claims, and we believe we have done a great job. The customers were satisfied. Claims is the moment of truth, and if we are not able to support them, what is the use of health insurance? It's just a paper, it's a promise. But we are able to deliver that promise. The shareholders supported us in a very big way because they had to contribute capital to ensure that it's a solvent organization. The learnings that came from that experience are great. In terms of prompt service, when everything was locked down, Star Health lights were on 24/7. People work from home round the clock. It's a great experience which tells us what the customer wants. Customer service is of importance. That gave us loyal customers as well. So while profitability took a hit, but I think we were able to create a great customer experience during that period. Post-listing, there have been certain changes in the regulations as well. The market has grown a lot, and this is helping us to expand the business and grow profitability.
All right. Now, insurance businesses often see quarter-to-quarter movements that don't necessarily always reflect long-term value creation. So then, what would you encourage investors and analysts to really focus on when they are assessing the underlying financial health of a health insurance company?
So there are important parameters. I'll list down 4 parameters which are important from a long-term sustainable business model for an insurance company. The first is the value and volume growth that the insurance is recording. It's the number of policies that the insurer is able to sell, as well as the value growth in terms of the average ticket size of the premiums. The second is the operating profitability, which is measured in terms of the consistent improvement in the loss ratio and the expense ratio. As long as the insurer is able to operate at scale, the expense ratio will continue to reduce. Based on the underwriting guidelines, the adequate pricing, the loss ratio will continue to show an improvement. So that's again a very important parameter. The third thing I will call out is the customer trust and customer satisfaction, which is reflected in the persistency ratio and the claim settlement ratio of the insurance company. As long as the same customer is coming back again and able to renew the policy, the insurance company should be confident that it is able to provide the best-in-class services to the customers, and the quality of the claim settlement also, how many claims it is able to settle. As long as they're able to settle all genuine claims of the customers, able to analyze proper fraud, waste and abuse cases, which will lead to certain rejections, that is fine. But they are protecting the interest of the customers at large. This again is the third important parameter. The last and the most important thing is the investment portfolio. Along with return on capital, the return of capital is also important. So one is they cannot be chasing just high returns. It is absolutely essential to ensure that the quality of the portfolio is maintained. So as long as the insurance company is able to operate with these 4 parameters in mind, I think the business model is sustainable and the investors can be confident about the company.
And as a CFO, your take on the quarter that went by and the quarter that's going to end now?
So Q3 was a fantastic quarter. The growth was very good. We saw consistent improvement in the loss ratio. It was not one-off. For the second quarter and third quarter, we have seen a loss ratio which is continuously reducing. So the whole efforts which we have been taking for the last 2 years are yielding results, and we see that this should continue in the future as well.
All right. Well, on that note, we are going to head into a short break on the show. When we return, we'll dive deeper into the role of transparency and global standards and how policy decisions could shape the next phase of health insurance growth in India. Stay with us.
Health Cover Uncovered, an initiative by Star Health Insurance and CNBC TV 18. Health Cover Uncovered, an initiative by Star Health Insurance and CNBC TV 18.
Welcome back to Health Cover Uncovered, an initiative by Star Health Insurance and CNBC TV 18. I'm in conversation with Nilesh Kambli, the CFO of Star Health and Allied Insurance Company. And we've spoken so far about scale, about strategy and boardroom decision-making. Let's now turn to transparency, policy, and leadership perspectives. Now, Nilesh, you were talking earlier about accounting standards, and I want to go back to that. Globally, of course, accounting frameworks are coming as close to reality as possible. So from a CFO's lens, what does IFRS do to sharpen the internal conversations, to basically help with compliance, and to basically present the real picture when it comes to risk, when it comes to profitability and capital planning beyond what is just the strategic talk in a boardroom?
Yeah. So from a CFO's perspective, IFRS is not just a compliance requirement. It goes much beyond that. All the business decisions which the CEO takes, which the management takes, is based on IFRS reporting that we do. So in terms of profitability, what IFRS does is it aligns the revenues with the expense reporting. Earlier GAAP, there is a mismatch in the way the revenue and the expenses are reported. So it aligns not at the point of time, but over a period of time as well, which helps to reflect the correct profitability, which helps to take correct business decisions as well. In terms of capital planning, with the correct reporting of profitability, it helps healthy discussions with the shareholders, investors in terms of the capital requirement, what the business projections are, how the planning and budgeting looks like, and why the capital requirement is coming. Is it to fund the losses or it is for the growth purposes? So it becomes absolutely clear. In the current environment, it becomes difficult to explain. So capital planning, budgeting exercise becomes much more efficient. It also helps in risk management. IFRS is based on fair value accounting principle. So if we are reporting our portfolio basis, historical cost basis, there can be some losses which are not reflected in the books, but it's just there in the books. Whereas in IFRS, it's a fair value accounting. The MTM gains and loss on the equity portfolio reflects in the books of account. So it helps the management to take effective and quick decisions rather than waiting for it over a period of time. So both in all the three things, in terms of profitability, risk management, capital management, it helps us to take efficient and correct decisions.
Right. And this is the globally accepted.
Yeah, it's standard. A globally accepted principle. In India, it is likely to be implemented effective 1st April 27. The regulator is working with all the insurance companies since the last almost 3 years now. They are test checking the results, but we believe it should come effectively 1st April 27.
Right. Okay. Now, as markets adapt to much greater transparency, comparability, of course, some amount of short-term volatility is bound to happen, right? Now, how should stakeholders then distinguish between structural change and some transitional ripples or effects that are happening on the financial numbers?
See, when we talk about fundamentals of the business, fundamentals of the business in terms of operating profits, profitability, risk management, it gets reflected in the way the reporting is done, because it is not again at a point of time, over a period of time. When you look at operating performance, the loss ratio and the combined ratio and the expense ratio becomes of critical importance. As long as the insurer is able to operate at scale, able to manage its loss ratio, able to reduce the expense ratio, I think it will continue to make profits. And that is something which is getting reflected through the Ind AS reporting. In terms of volatility, yes, with equity exposures, there can be quarterly volatility, but no one works for a quarter. What one needs to see is the rolling 3-year returns. If as long as the portfolio is consistent, it is able to generate the returns which the business is expecting, I think quarterly volatility is fine. And that is how we are looking at it when we are managing this business. So fundamentals of the business don't change with reporting standards, but the way they are communicated makes a lot of difference in ensuring that all the stakeholders understand the way the business is managed and the way it will perform in the future. So I think that's where the role of reporting comes into play.
Right. Okay, let's also talk about the recent union budget 2026. When you look at it from a healthcare or health insurance perspective, what are some of the policy signals that stood out for you? What were the hits and the misses according to you?
See, I think it was a great budget. The signal from the government is not just funding of health insurance, but de-taxing it, de-tariffing it, which is a very big move. The movement started not now, but in September 25, when the GST was reduced to 0% for retail health. It's a very big signal, is what we believe. Today, very few commodities who are essential, life-saving, are in 0% GST. By making retail health insurance also 0%, I think the government is making the signal to the population of India that this is an absolutely essential product. The government can do its bit through the Ayushman Bharat scheme, but beyond that, I think it needs to buy. People need to buy private health insurance. So one more thing they have done is the GST on pharmacy has been reduced from 12% to 5%. In the recent bill, also, if you see, the start of the bill was on Biopharma Shakti initiative, which is domesticating or domestic production of pharmaceutical goods. There was also a duty exemption on 17 critical illnesses, life-saving diseases where the duty has been reduced. So if we see a lot of focus of the government on medical cost inflation, and Nirmala Sitharaman, the FM, spoke about it also in the opening speech. So we believe, the government's focus is there. Health insurance as a market is growing. The penetration levels are improving, and it's a decade-long growth story that we'll see.
Okay, so like you said, now in 2025, GST on retail health insurance premiums was struck down to 0. Have companies then passed on that benefit to the consumer yet? And are you seeing an impact, more people buying products yet?
So I will start with the statement. The GST benefit is completely passed on to the customers. This was done in September. We are 4 months into this process. there was certain impact on the insurance company in terms of input tax credit not being available. But as an industry, few larger players have come together and passed on this GST cost to the intermediaries. It is well accepted by the intermediaries also. The value proposition that we gave is, with this GST reduction, there is a volume growth in the fresh business. We have seen a persistency improvement also. So in absolute income levels, we see that the intermediaries are able to maintain the income levels. It's a win-win for both the customers, the intermediaries as well. See, one has to look at the pricing decisions which the insurance companies make. It is based on actuarial science, it is based on data analytics, it is as per IRD regulations. So that's independent of the GST cut. There is medical inflation, there is cost of healthcare which is increasing. The price increase is taken effectively to ensure that the customers get the best-in-class service. And what we have stated in the past also, we'll take small increases which will ensure that the burden doesn't come up very heavily in the 3 or 4 year period. So we'll see, we are monitoring the portfolio, and based on statistical and data analysis, we'll be taking the price increase going forward.
Right. And so far, has there been an impact that you felt? Do you feel more consumers taking on to the health insurance products yet, or is it too early to say?
No, so post the GST cut, Q3 was the best-in-class quarter. Post-COVID, this is the highest growth that one has seen in this quarter across the industry. It has both volume growth and value growth. People have been able to up their sum insured, which is the coverage, because the cost of product is reduced. And we see more and more people buying health insurance. So it's all around a very good performance for the retail health insurance in Q3.
Great. All right. So finally, to end this on a lighter note, I know that you're also an avid biker in addition to being a CFO. So, of course, being on the road demands a lot of discipline, a lot of attention, a lot of managing risks of a different kind. So, does that role or, that passion of yours help shape your thinking as a CFO, or would that be very far-fetched?
No, absolutely. I think I have been riding for the last 10 years. By riding a motorcycle requires a lot of focus, discipline, risk management skills come to at what speed you have to overtake, which are the roads where you have to be safe. So a lot of these principles gets applied in the business. The solitude, the mental engagement is like, meditation, which helps to clear the mind, reduce stress. So all in all, yeah, well-connected topic when it comes to riding a bike and, handling the CFO role in this complicated environment.
So a good analogy to end that show with now.
Yes.
All right. Well, we've heard today how building a successful health insurance business isn't just about scale. It's about discipline, transparency, capital judgment, and long-term thinking. Nilesh, thank you very much for joining us on the show today. And you all, thank you for joining us. Hope you enjoyed the incredible insights. Until next time, it's goodbye.
Health Cover Uncovered, an initiative by Star Health Insurance and CNBC TV 18.